Hi, hello, how are you? We prepared this video to drive you to the upcoming Bank of England decision. Hope you find it interesting and useful for your trading next Thursday, okay? As you know, Brexit has been a game changer in the world, and in the UK has mean a change in prime minister and quite a political and economic revolution. The pound lost around 1,900 pips in a couple of days after the report. And there was the general sense in the market that neither the government, not politicians from the opposite party, were prepared to deal with an actual Brexit, right? But then came Mark Carney telling us that he's preparing a stimulus, and the market began to build up a bit of confidence because it seems that at least the Bank of England had a background plan in the case of a Brexit, right? And here we are ahead of a meeting. Let me share with you what the market is expecting, okay, through the macroeconomic calendar. As you can see, the bank has an ongoing facility plan of 375,000 billion pounds a month. It has been on for over 7 years already, and seems there's not going to be a real change in year. Rates were cut to 0.5% in March 2009, also a long time with rates unchanged, right? And despite right now most economists are expecting rates to remain on hold, the fact is that Carney's words last week are fueling speculation that we may have a 25 basis points rate cut as soon as this week, right? In the future, the market is also expecting some action for August, a bit more of a stimulus, although there's not a clear picture of which tools the bank may use and how we'll implement it. Nevertheless, easing is coming in the UK. What I was taking a look at is that according to big economist news agency, the rate count, right, in the MCC has remained changed, right? No hikes, no changes. It was flat at 9. I'm not really sure about that, but I do believe that it has been at flat at 9 for most of this year, right? Now, the market is pricing in that at least 3 members will go vote for a cut this month. Anyway, whether the bank votes or not to cut rates, the fact that even if the Bank of England leaves its policy unchanged, Carney's words should be dovish, right? We're expecting quite a dovish stance from the central bank, and market expectations for some kind of August easing are high, quite high, which means that the pound remains at risk of losing further ground, okay? In general, the market has already priced in the 25% rate cut. So if we had it with a not so dovish stance, right, the pound may remain pretty much unchanged with some spikes either side of the board after the announcement. But if we don't have the rate cut, it will probably recover a bit more ground, particularly if the stance is hawkish, although that seems quite unexpected at the current situation, right? Sorry. Anyway, let me share with you my chart of the pound. Let me take a daily outlook. The huge impact that the Brexit had has sent the pair down to 28, 27.93, in fact. But as we have discussed in many of these other videos, the fact is that 130 seems like a line in the sand for the market and for the government also. The spike below that level was short-lived. The pair recovered some ground, and here we are standing above 131. I could risk that, given that the fact that the recovery has been quite shy despite uncertainty has been partially clearly with the latest political and economical developments, some of them yet to be seen. I was saying that the pair will probably break back below 130 and even retest this 28 that has now become a major static support level, right? But if somehow an extra ultra dovish stance from the central bank came out, right, and the market is catch off guard with maybe the Carney announcing negative rates, then expect the pair to break through that 28 and reach even 130 during the upcoming days, right? If, however, it's not as dovish and we have pretty much what we are expecting, I would say that the recovery can extend up to this region, 33.50, but not much more. This is the highest, around 35.30 post Brexit, and this is the level to watch to talk about a firmer pound recovery, something quite unlikely for this week. Anyway, if you have any other questions or comments, remember that we are here and we will be covering the event live here at FX Street. So be sure to be there next Thursday. We will be waiting for you and get ready, and we will be ready to answer your questions. Okay? Thank you and see you soon. Bye bye.